Welcome back. You're still tuned into Trading Hour. Let's discuss the internet research space, the quick commerces of the world, and also Eternal, Swiggy, and other stocks in the sector. Sachin Dixit, who is the lead internet research analyst at JM Financial Securities, is joining us now to discuss some of these names. Sachin, good morning. Thank you so much for joining in. First up, tell us, what did you make of the quarterly results for this particular space between Eternal and Swiggy? What's your top bet and why?
Sure. So overall, I think in this space, what we are seeing consistently happen is that there is a sort of gulf appearing between how Eternal has performed and how Swiggy has performed. Interestingly, both of them do well when the competitive environment looks a bit more benign. Interestingly, we have not seen that happen. There has been a lot more news flow coming in from different sectors, from different companies trying to make a foray into quick commerce, which has resulted in probably both the stocks being slightly weaker in the recent 1 month or so. Overall, with basically news flow going in terms of how the competition is likely to be, that's something which will keep on impacting, I think, both of them. Eternal has been slightly more clear in that sense. They have not seen so much of an impact happen, largely coming from the fact of the balance sheet that they have and the track record that they have already delivered. Swiggy is coming from a place which is slightly behind. I think there is a catch-up that needs to happen.
Sachin, thank you for joining in. You mentioned catch-up, but the question being, has Swiggy hopped on to this bus a little too late? Because Eternal, for its quick commerce expansion, has been really aggressive over the last, say, 2 to 3 quarters. But Swiggy has been slow in trying to add more dark stores for Instamart and has now just approved yet another fundraise. So does that push them further behind in this quick commerce race?
It's tough to say, right? Logically, if you think of it, it's a very large market. Ideally, there should be more than, let's say, 2-3 players who should be making value out of this market. Eternal obviously has been more aggressive thanks to the capital that they have at their disposal. Swiggy, coming from a bit of a sort of, as you highlighted, they might be slightly late in terms of how they are catching up with the market trend. Which is also a function of the capital they have, and which is also the reason likely why they have gone ahead and taken that approval to raise more funds. It remains still to be questioned, like whether if they get the money, and if they get the money soon enough, whether they will go ahead and spend all that with as much aggression or not. Because logically thinking, it's a large market, there could be regional winners, right? If you look at broader traditional retail in India, there are region-wise winners, right? There are people who are quite popular in the West, there are people who do quite well in the East. So I don't think necessarily you need one single player to win across the country. So that's where the positioning stands. Obviously, we have seen so far that Eternal is one player which is trying to do a good nationwide play, thanks to what they have already proven in the past and how their unit economics are shaping up even in the recent few quarters. We obviously see that they are positioned quite well for that, but I believe there could still be people who might not necessarily win nation, but they might be a decent sort of play in their own defined regions and how so we go about it.
Okay, so that's about these food delivery platforms. What about some of these travel tech platforms? We did see some of them reporting good numbers, but that didn't happen with something like a Yatra. We did see Ixigo doing well. It's been quite volatile, right? Some of these stocks have done really well. What do you make of this entire space?
Sure. So I think what need to be understood about the space is that this is a space which does get benefited or impacted due to some seasonality coming into the picture, right? So if you look at Q2 results, right, a lot of these companies did see some impact coming from the limited supply, whether it's happening from the limited supply of airplanes coming into the country. A lot of our airlines are still struggling to get the right planes that they wanted and within time. And then there is the impact of extra rains. There was a lot of landslides that happened in the hills this quarter. right? So all those things do play out in the travel tech space. But if you talk about the couple of names that you mentioned, what is interestingly happening is that Ixigo, coming from a more of a tier 2 sort of a background, which is where a lot of growth is coming from. There are a lot of upgrades, there's more travel that is happening in those geographies, is certainly driving more growth. Yatra also reported decent results, so which is why the stock has also reacted quite well. But I think you will keep on seeing in travel tech that there will be some seasonality which will happen, but there might still be consistent winners. Whether you look at MakeMetric, for example, right, which is a market leader, while they might not be growing at the same rate which an Ixigo might be growing, but if you look at the scale at which they operate, their growth is still commendable.
You know, Sachin, I just want to complete this loop on the quick commerce and the food delivery companies. The biggest talking point has been the fact that they have been making losses. At least Swiggy had significant losses this quarter as well. Eternal is profitable, yes, but even on an EBITDA basis, but the net basis too. So because also there is a treasury income contribution to that. How long does the market wait for a company like Swiggy, let's just stick to that for that matter, for it to turn profitable? Because they have said that they will turn profitable sometime during FY 27-28. But would the market want to project that and reward it accordingly? Because the stock hasn't done much. It's back below its IPO price. So how long do you wait for companies to turn profitable and then value it accordingly?
I think interesting question. Honestly, since the whatever last 4 to 5 years, which is when basically Eternal got listed as Zomato, right, July 2021, we have seen cycles happen. There were points of time where people were willing to give good multiples for growth. Then came a phase where everyone wanted profitability, which is when a lot of these names, whether it's Eternal, Policy Bazaar, Paytm, right, all of these companies started to focus more on profitability, and they delivered that profitability. Right, so there was that phase coming in. Then came quick commerce into the picture, and all of a sudden people saw that this is a vast market. There's a lot of growth that can come, and which is why people again started rewarding for growth. Right, so coming back to the question that you asked, right, Swiggy, obviously at the time of IPO, people build in certain assumptions on how the environment will evolve, and that environment continues to evolve even today, right? If you look at how people are guiding towards dark store addition, right, Eternal did guide about when they will reach 1,000 dark stores. Then they upgraded that guidance further. Then they upgraded the guidance on terms of number of dark stores further, right? So in that sense, if you can deliver that trend, right, I mean, doesn't matter whether you are Swiggy or Eternal, right, if you can deliver the trend that you are able to deliver on that growth, and you are able to show that your unit economics is improving over a period of time. Obviously,
Right.
in a phase in which you are expanding rapidly, you might see more impact happening on your console margins. But if that trend is delivered, I think market will reward.
Right.
Because I don't think people are playing this for 2-3 quarters. This is probably a longer term play.
Right. All right, Sachin, pleasure having you today. Thank you so much for joining in and discussing the latest trends in the e-commerce and, of course, the internet space. Hopping